What if the future of money is already being tested, and most of the world hasn't noticed? While countries debate cryptocurrency regulation and digital banking reforms, China has quietly launched one of the most ambitious financial experiments in modern history, a fully government-backed digital currency. It's called the digital yuan, and if successful, it could reshape global trade, challenge the dominance of the US dollar, and transform how billions of people spend, save, and move money. But is this the future of financial innovation, or the beginning of a new kind of economic control? China's digital yuan, officially called e-CNY, is a central bank digital currency, or CBDC, unlike Bitcoin or cryptocurrencies, which operate on decentralized networks. The digital yuan is issued directly by China's central bank, the People's Bank of China. This means it combines the convenience of digital payments with the authority of state-backed currency. China didn't invent digital payments. In fact, Chinese citizens were already using mobile payment apps like WeChat Pay and Alipay long before many Western countries adopted cashless systems. But the digital yuan goes further. It allows the government to create programmable money, currency that can be tracked, monitored, and potentially controlled in real time. And China isn't testing it on a small scale. It is piloting it across major cities, millions of users, and real commercial transactions. But the real question isn't how it works inside China. The real question is what happens if China begins using this currency beyond its borders. Because that's where the global financial system could begin to shift. For decades, global trade has been dominated by the US dollar. Today, nearly 60% of global foreign exchange reserves are held in dollars. International trade, oil markets, and financial settlements still rely heavily on UC-controlled systems like SWIFT. This gives the United States enormous financial leverage. Sanctions, trade restrictions, and banking exclusions are powerful geopolitical tools. China has studied this system carefully, and the digital yuan may represent an attempt to reduce dependence on Western financial infrastructure. By creating an alternative payment system, China could allow trade partners to bypass traditional dollar-based settlement networks. This could be especially attractive to countries facing sanctions, banking restrictions, or limited access to global capital markets. But China's ambitions go beyond geopolitics. The digital yuan also strengthens domestic financial oversight, reduces tax evasion, and improves monetary policy precision. Yet there is a deeper layer most discussions ignore. The digital yuan isn't just about replacing cash. It may change the very concept of how money behaves. Traditional money is neutral. Once you receive it, you decide how and when to spend it. Digital currencies allow something different, programmable financial behavior. With programmable currency, governments can set expiration dates on stimulus payments, limit spending to specific industries, monitor economic activity in real time, directly distribute emergency relief funds. Supporters argue this increases economic efficiency and reduces corruption. Critics warn it could increase financial surveillance and reduce personal privacy. China presents this as modernization and efficiency. And in many cases, the system has improved transaction speed, reduced fraud, and expanded financial inclusion in rural regions. But China isn't alone anymore. And what started as a domestic experiment is now becoming a global financial competition. More than 130 countries are now researching or testing their own digital currencies. The European Union is developing the digital euro. The United States is studying a potential digital dollar. India, Brazil, and several African economies are also exploring CBDC systems. But China remains years ahead in real-world implementation. It has already tested cross-border transactions through partnerships with countries in Asia and the Middle East. If these systems scale globally, international trade could become faster, cheaper, and less dependent on traditional Western banking networks. This represents one of the biggest structural shifts in global finance since the creation of the Bretton Woods system after World War II. And this leads to a critical strategic question. If money itself becomes geopolitical infrastructure, who controls the future of global economic power? Despite its progress, China's digital yuan faces serious challenges. International adoption depends on trust, regulatory transparency, and political relationships. Many countries worry about data security and financial sovereignty. At the same time, digital currencies raise universal concerns, not just in China, but worldwide. How much financial privacy should citizens have? Who controls transaction data? And what happens when governments gain real-time visibility into entire economies? These questions are no longer theoretical. They are becoming part of global financial policy debates. History shows that the nation controlling global trade systems often shapes global power structures. From the British pound to the US dollar, currency dominance has always reflected geopolitical influence. Now, for the first time in decades, that system faces a serious technological challenger. China's digital yuan is not just a technological upgrade. It represents a new model of financial governance, economic competition, and digital sovereignty. Whether it becomes the foundation of future global trade or remains a regional experiment could shape how money works for generations. The future of currency may no longer be printed. It may be programmed. And the race to control that future has already begun.